Hey everyone, and welcome in to another daily editorial here on the KE Report. We are chatting with Craig Hemke, founder and editor of TFMetalsReport.com. Now, Craig, just a quick recap here of the precious metals sector. Look, it's continuing to be boring and unfortunately continuing to have a bit of a downward bias. Now, gold is still hanging in there relatively well. However, this is a down week for gold. It's not a big down week, maybe about 1.5%, almost 2%. But the stocks continue to fade. The big dichotomy here being gold right around 1,800, stocks testing out some of those lows from back in August and March. So that would correlate to a gold price of around 1,675. Big discrepancy there. But again, on the gold stock front, we have GDX down about 5%. So again, underperforming or overperforming to the downside, unfortunately. Your takeaway, Craig, I know this is a frustrating market, but boy, oh boy, what do you have to say about coming after Labor Day still being under pressure?
Well, Corey, it's Friday afternoon. Can we just not talk about this and I can just go drink instead?
Sure, you want to go? We can just start watching football.
Yeah, something. There's got to be something more fun than this. This has been just such an extraordinarily painful period. If anything, I look. Everybody knows I make these annual forecasts, and the last couple of years have been pretty good. And we always joke about it, Corey, because it's like, when you're right, like I was the last couple of years, it's like everybody goes, well, yeah, anybody could have seen that coming. And then when you're wrong, like this year, everybody's like, hey, look, you're an idiot. And they're probably right about the idiot part. But the main thing is, I thought we'd go higher this year because I felt very strongly that real interest rates were going to go sharply negative as inflation picked up, but the Fed couldn't allow interest rates to rise. And so what have we seen? Real interest rates go sharply negative. Inflation has picked up even more than I ever thought it would. And interest rates have gone flat. And yet, what gold's now down over $100 on the year and silver's down $3 maybe, 10%. And it leaves me not necessarily questioning, where I came up with this stuff, because real interest rates, inflation adjusted interest rates, have been the most correlated thing with gold prices over the decades for, fundamental reasons. But yet this year it has been about transitory, it seems, and that investors or traders or hedge funds or whatever, anybody that buys the gold futures contracts at set price, have had no interest in buying gold because apparently they still believe that this transitory message is the right one, that inflation is going down and that the Fed's going to be tapering and interest rates are going to go up, and therefore real rates, oh sure, right now they might be negative 5%, but by a year from now they might be positive again. And so therefore gold just has never done anything. And on top of that, this persistent downtrend has been really hard to watch, because it's been at least 5 occasions now since November when it looked like, okay, this is our moment. Okay, we've bottomed and now we're ready to break out, either getting above a moving average or breaking out, making a higher high or something. And then right at the cusp of that breakout, the rug gets pulled out from under us. We get some big, massive red candle on the daily chart. And like everybody just throws up their hands and walks away again, and the sentiment gets crushed and you never turn. And so, like you said, it's been one long, ugly downtrend. And unfortunately, it persists. And now we'll just wait to see. We got the Fed coming up week after next. See what they have to say. And, just try to keep our sanity in between.
Well, Craig, to your point about the false breakouts or the hopium in the sector, we had something like that last Friday. And I just want to circle back to that real quick. When the jobs report came out and it was weaker than people expected, and the dollar was rolling over, gold got right back up to that resistance in the mid 1830s. Yep. And it closed the week there, and it closed the week above some key moving averages. To your other point, it was above the 200-day, the 100-day, and the 50-day. And on a close like that on a week is kind of a positive sign. That was 2 weeks in a row with good positive weekly candles. We get back from Labor Day, and then bam, it smacked right back down with one of those big red candle sell-off days. What do you make of that, and what do you make of gold's inability to get over that resistance level?
Yeah, it's aggravating in that, Powell had told everybody at that Jackson Hole conference, at the end of August, that he'd yet to see substantial further progress. He'd be watching, wasn't ready to announce any tapering yet, and we'd be watching the data very closely. So we all said, okay, well, 1 week from that day was going to be the jobs report last Friday, the 3rd. So we better wait to see what happens. And we get to that, and the jobs report, the total number of jobs is not even a third of what the expectations were. And you thought, okay, there you go. Now we're off to the races. Like you said, we close above all those key moving averages. We are butting up against making a higher high finally that would generate some upward momentum, thinking all you got to do is get a couple of bucks intraday and you'd be making higher highs. And we never even got that chance. We just immediately, even during the U.S. holiday and then immediately on Tuesday, just smashed right backward. And so, given what Powell had said and then given the data, you thought, okay, we're good. If anything, here's what I think the problem then became, besides the usual stuff. Within the employment report was a big jump in average hourly earnings, which should not be surprising. If people are unwilling to go back to work for whatever reason, then they're really one of the few alternatives that employers have is offer higher wages. And then that's inflationary. That's cost push inflation, or demand pull inflation, where the company has to pay more to people. That gets more, essentially more cash chasing the same amount of goods and so forth. That's inflationary. And so on that jobs report last Friday, the bond market actually sold off. Just like here on Friday, we had the PPI today, with a PPI annualizing now over 8%, and the bond market sold off. And so rates versus last Friday morning, the 10-year note, before the jobs report, rates, the 10-year note's about 8 or 10 basis points higher. That nominal rate, that's always bad for gold. The machines see a sell-off in bonds, they sell gold. And then, for whatever reason, and again, when we talk about the dollar, we're comparing the U.S. dollar versus similarly other, devaluing fiat, the euro, the yen, the pound, the rest. So the dollar's been stronger this week because interest rates are rising, which again, that's a whole other topic. I think that's silly, but it's not up to me to program the computers. And so the dollar's up this week too, and back above its 50-day, because last Friday she had it closed down below its 50-day and looked like the bottom was dropping out, and then suddenly it magically reversed on Tuesday. So there's just been this combination of factors: higher nominal rates, the dollar looking like maybe it's put in a low back above its now 50-day and moving higher. This notion that, you know what, the Fed's going to taper anyway. Wall Street Journal, mouthpiece of the Fed, announced today in what was clearly a trial balloon to put the word out that the Fed's probably going to announce a taper schedule that begins in November. And so now all of a sudden that is on the table, where a week ago it seemed like it wasn't. And all the stuff comes together to completely wipe out our sentiment again and leave me looking for my bottle of Tito's.
Well, Craig, what hope, I guess we can say, do precious metals investors have right here? What will drive the market higher? Or, hey, is it a dead market now? Did we just have the bull market and now have we rolled over? But because we did, in all fairness, see a lot of enthusiasm come into the market. We did see gold get up and make a new all-time high. It was a marginal all-time high, but you know what? It was a good run the gold was on. And I know there's still a lot of bullish commentators out there, but do we need to take a step back and say, maybe this bull market is over?
I guess so. Yeah, everybody's entitled to their opinion. You look at it, that makes a market, but I don't think that's the case. Again, we're lamenting, and I'm all depressed and sad at, basically $1,800 gold. Well, somehow I managed to make it through 6 years in the desert at $1,200 gold. So I guess there's some kind of perspective I need to keep, that we're 50% higher than we were for a whole period between 13 to 19. And silver's the same way. I mean, for God's sake, silver was under $18 for like almost 7 years. It was between 14 and 18. And then in a 3-week period last summer, it resets all the way up into the upper 20s. And now it's just kind of flagging sideways as everybody, from banks to merchants to wholesalers to retail investors to users to mines to everybody gets used to, is this the new normal? Is 25 the new normal, or are we going back to the old normal of 15? And so, I don't know, I think I look at it more as kind of a way station, kind of pausing point where we adjust to, this new surge. And the next surge will come, whether it's a sudden realization that inflation's not transitory, whether it's a sudden realization that the Fed really can't taper because if they step away from the bond market, it'll collapse and rates will spike, and then that's a complete calamity across all markets. Or it's eventually a reversal, which should be like the longest term thing, where the Fed finally reversed at the starting in the late 2018, but officially in June of 19. And once they reversed policy from taper and drawdown and all that other mumbo jumbo, gold went from 1250 all the way to 2080 from June of 19 to August of 2020. So maybe the next time the Fed has to admit that they can't taper or they got to bump the QE back up again for whatever reason, maybe that's when we finally take off again. So I look at it not as, your bull market was just this brief glimpse in time. I think there's this ongoing thing really in commodities across the board. And we're just in this kind of phase where after 5, 6, 7 years of, like I said, wandering in the desert, we're just kind of getting ourselves used to these prices and all of the market participants getting used to it before, maybe we adjust higher again.
Yeah, maybe that was just a little oasis in the desert, and we still got a big lake or ocean ahead of us. Let's see. But
Right.
You brought up silver there, Craig. What do you make of the silver price having problems getting over its resistance levels lately as well? And we generally in a bull market want to see silver start playing catch up on gold, and the miners start playing catch up. And usually when silver and the miners are pushing higher, then it's kind of full steam ahead. The whole sector is moving higher. What do you make of silver at this point?
Well, what I've been telling people on my site is again, we're in that kind of flag going sideways, digesting that move from last summer. And the whole world, anybody that has an interest in silver, like I said, from banks to merchants to wholesalers to mints to retail mining companies, go down the list. And you get pretty kind of complacent, bored, whatever, when your price is in this range from 14 to 18 for 6 years. And so when all of a sudden it's 28 or 24, that kind of rattles you a little bit. You wait to see what's going to happen next. Is it going to soar again? Is it going to pull back? Or is it going to go back to 14? And who knows? Maybe we will. But I think the really big users of silver are waiting to find out. Look, as long as it stays in this flag, if you will, above 22 and below 28, then we're just continuing to go sideways. How long? Well, if we were sideways between 14 and 18 for 6 freaking years, maybe it takes longer than 1 year and 2 months, to digest that. How long, I don't know. But as long as it stays above 22, certainly on a weekly closing basis, then really all this in between stuff is just like, yeah, whatever. The hard part is, and I don't mean to sound flippant or smug or nonchalant about it, but because I get a lot of people on my site, they want silver to go up because they're going to make a lot of money, whatever in it. Cash? You're going to sell your silver and turn it back into cash? Well, then what are you going to do with your cash? I see my physical precious metal, and I own some mining shares, but that's just kind of for fun. I see my physical precious metal as my shelter in the storm, my boat to get me from one point to the other in this, crazy monetary world that we live in. And so, yeah, the price goes up, the price goes down. But, frankly, the value of what I have in my safe and, scattered around the world, whatever, the value of what I have, it's more valuable this week than it was a week ago. It's more valuable this month than it was a month ago because all of the underlying stuff, the rationale why I started buying physical metal in the first place, has only gotten more bullish, sadly, as the years have gone by.
Well, just one more question on silver. We've heard the narrative floated out over the last 2 weeks that because there's going to be gold-backed cryptocurrencies, Craig, that silver will not have a place as a monetary metal anymore and that its days are over. It's just an industrial metal now. What do you make of that narrative?
Okay. It hasn't been a monetary metal for decades anyway. Yeah, there are other people that say that's the one way you can get something sound again is to back it with. I don't know. It just on a straight supply demand basis, I'll just stick with, with what I know, I guess, Shad. What do we mine? Maybe the whole world, including China, 850 million ounces a year. I don't know if you want to call recycling just to make the numbers match up, 150 million. So you got 1 billion ounces of silver coming to market every year. Industrial demand's pretty routinely at least 600 million ounces a year and growing with solar panels and electronics and everything else that silver is good for. But let's just call it 600. If investment demand exceeds 400 million ounces, which this year it very likely will, you've got a supply deficit. So how long can that continue? If the supply deficit continues, how long until that actually impacts price, whether or not it's considered a monetary metal or not? So I like the supply demand dynamics. I like the idea of a commodity bull market in general after how long the commodity bear market lasted. And so I'm not sure whether or not it ever gets returned to a monetary metal. That doesn't really impact the idea why I own it.
Fair enough, Craig. We'll wrap it up here. Look, there's just not that much more to talk about for the precious metal sector right now. It continues to be under pressure. Not that much has changed, and clearly price is showing us that, well, things are maybe grinding sideways at best, but yeah, right now it's just a tough market. We keep on talking about it, and the toughest part about it is that if you hold any of the shares, a lot of those just keep on drifting. So we'll keep an eye out for any other catalysts that might change this direction. But right now, wish we could end the week on a more positive note. But hey, you know what, Craig? We do have the NFL back, so it gives us something to watch this weekend and get ready for next week. I'm sure we'll be chatting next week. So, Craig, I hope you have a great weekend. And yeah, we'll spend some time chatting next week, hopefully about some more encouraging topics and catalysts for the metals.
You got it. Thanks, guys.